In this video, we're going to look at how to enter transactions in the general journal. Now, I've just got a few transactions here that I'm going to use to explain this. To recap, if you look at the accounting cycle, most of you would know by now that the accountant doesn't get a textbook with an exercise in or a piece of paper with transactions on like in your exams. So we know in the accounting cycle that the first step is transactions takes place on a daily basis, and there we'll see that it's recorded on source documents, and from source documents the accountant can enter it into journals. Now at this stage in junior accounting you will probably enter everything into a general journal, but as you progress in accounting you will see there's more than just general journals. So we're going to concentrate today on entering transactions into a general journal. Now, general journal is also known as your book of first entry. What we decide and what we determine here is which account will be debited and which account will be credited. So if we look at the transaction, the owner transfers $225,000 into the business bank account. You got to first work out what are the two accounts involved. Now, those of you who've started accounting already would know that cash at bank increase and capital is involved. Now, you have to know the nature of these accounts in order to do this. Now, we go and we work out bank or cash at bank increased. It's an asset. It has a debit nature, so I debit bank. The other account involved is capital, which is owner's equity, which has a credit nature and increases on the credit side. So there is our double entry, debit bank, credit capital. In blue, you will now see what we call a journal narration. Narration is like a story. In other words, a narrator tells a story. So you're basically saying, why did we debit bank? Why did we credit capital? And it could be owner started a business with $225,000 contribution or capital, etc. You then draw a line. Now, I know it's difficult to see in Excel, but you draw a line because it means it's the end of the transaction. If we go to the second transaction, paid for a trading license and ABN, $700. Again, you got to work out what are the two accounts involved. Now, if you look here, the verb says paid, so I know bank is involved. When we pay, at this stage, you should know that bank decreases. Now, what did we buy or what did we pay for? A trading license and an ABN. And that is an expense to the business. So the nature of expenses is debit. So I would debit my trading license, and if you want to add ABN in there. And I already said bank is an asset. We paid money. So bank would decrease. So I would credit bank. My narration, business paid for trading license, and you could put in there by check or electronic transfer, etc., etc. Third transaction, bought a delivery ute, $34,000, and paid $705,000 deposit by check from Joy Motors. Right, now this is an interesting one. There's more than one way of doing this. You can do one journal entry or you can separate it. Now I will do the easier way and separate this. So I'll do the first bit, bought a delivery ute. Now you've got to understand, bought or buy does not necessarily mean we paid for it. Here they said we only paid for $7,500. So let's forget the $7,500 that we paid for and we split this. So what did we buy? A delivery ute. Now a vehicle or ute is an asset to the business. My assets would increase with the total amount. We did not pay the whole amount, so that means we have now a business called Joy Motors to whom we owe money, and they are a liability to us, and we create an open account for them called Accounts Payable Joy Motors. Now, let's look at the nature. Assets increased, that's why I debited vehicles. Accounts Payable is a liability, a credit nature, so we've credited Accounts Payable Joy Motors. And my narration could be at this stage, business bought a vehicle for $34,000 from Joy Motors. Now, as I said, this transaction we break up, or you could break it up in two like I'm doing here. We also know that we paid. So whenever we paid, bank is involved. Money decreases, bank an asset, bank will be credited. What account will be debited? We've just created a liability, accounts payable Joy Motors. At this stage, we owe them $34,500. However, we did pay them a deposit of $7,500, which means my liability, credit nature, this time decreases, so we will debit our liability with that deposit. And what is the other account involved? Bank. Bank and asset will be credited because assets decrease on the credit side. And my narration will be pay Joy Motors $7,500 on the debt, or you could put there as deposit for the motor vehicle. We look at the next transaction. It says bought trading stock. Now, another word for trading stock could be stock or goods. Inventories is what most businesses will probably use. Right, so now you've got to work out what accounts are involved. Like I said to you before, bought doesn't necessarily mean bank is involved. However, we see there we bought something for cash, which means bank is involved. Trading stock, and if you think of a supermarket like Coles, trading stock or inventories are every single thing inside the business that they buy to sell. That's called trading stock or inventories. Everything Coles has in that shop is a non-current asset to them. So when we buy trading stock, our non-current asset inventories will increase. Now, the nature of assets, debit. What happens to the money in the bank? We will pay, so the money decreases, bank an asset, it will increase on the credit side. My narration will be bought trading stock and paid for in cash terms. The next one, cash sales for the day. Now there's the price that we sold the goods for, and then it says here cost of goods sold $6,500. Now you were previously explained about cost of goods sold is what is the value of those things that we sold for $1,300. You at this stage would know cost of goods sold is regarded as an expense. Now this is important. I break this up in two steps and I always do the sales bit first. Sales is a revenue, nature credit. So I know sales will be credited with that amount. We receive cash, we put it in the bank. Bank is an asset, so bank will be debited. And like I said, I would credit sales. That is my first step, and I would just put their sales for the day. Now, and this is the important step that sometimes confuses students. Think of Coles. They just sold some of their stock. So we did step one, debit bank, credit sales. But now picture this, what happens as those customers walk out? They are taking the inventories or the goods, their groceries with them. So what happens to inventories? It decreases. With what amount? The cost of goods sold. Cost of goods sold is my expense, so I debit it. And my asset inventories decreases on the credit side. So I will now go and credit inventories. And my narration, cost price of stock sold. And that is basically how you would approach or do a general journal.